Hello and welcome. Thanks for tuning into this mid show here on NDTV Profit. I'm Harsh Saita. Two very interesting managements today with us. We have Garware Technical Fibres first off, good strong growth. Also, what are they doing with their cash balances will be key. I spoke with the management, Mr. Vayu Garware, Chairman and Managing Director at Garware Technical Fibres. Let's listen in to that conversation.
Yes, Q2 FY25 has been very good for us. We've grown profit at almost 30% profit before tax, and we're able to maintain a margin of 21% profit before tax to sales. So I would say we are on our plan for FY25. We have a quite detailed plan for the next few years, and we're very much on that trajectory. We did have a couple of softer years post-COVID. Those were linked to some external issues, particularly Norwegian tax, which subdued investments in the aquaculture industry. And we did have some also negative external environment on our American sports net business. Those two have both been put behind us now. So F24 was good for us in terms of growth, and F25 continues to be. And we expect that trajectory to go forward, including in F26. This quarter particularly, we've really been driven by the global aquaculture business as well as our geosynthetic business. The infrastructure investment in India, driven hard by the government, has been a very positive area for us, including with soil reinforcement structures and things like that. So we're quite bullish on that area.
So would it be fair to therefore say that a 20% kind of growth clip for the next 2 to 3 years looks reasonable to expect?
That is our plan, and I'll just clarify that our focus is always on profit growth. So 20% profit growth is something that is very much on our plan.
Sure.
And we hope that we will be close to that.
Right. And what would the levers for that be, sir? Because your margins roughly have ranged between the 18 to 21% kind of band since FY 17-18. And therefore, and of late, it's been on the higher end of that band, right? It's been at 21%. And therefore, would you believe that it's going to be margin levers going to play out on profitability or top line? And how much of top line growth would you expect?
So as a company, we're very focused on innovation, and part of that is to continuously deliver new products, upgrades to our customers. And that is partly what is driving the margin. So particularly in the Northern European aquaculture industry, we've seen a lot of focus towards sustainable solutions, and that's become a core part of our innovation strategy. So we see our customers upgrading their solutions all the time, and that's what we've also seen in Q2. Similarly, in South America and Chile also, we've seen significant upgrades of the value-added products we give. And that is also happening in the geosynthetics area and other areas. So that's a very core part of our strategy, and that drives both margin as well as value and volume, because that's a faster turnaround. Customers tend to upgrade prior to the need for replacing products because it delivers much more value to them. Apart from that, we are refocusing as a company on value-added ropes, which has not been a focus for us for the last few years. That has been a core. It's very much part of our hitting range, so to speak, technically and with machinery. So that's another area that's driving value both in India and outside. And we see that also as a strong area for the future.
If I were to break up a revenue mix, how would you categorize each of the various products? And what's the kind of growth clip for something like a ropes for you? Because the base will largely be very, very low, and therefore the growth clip will definitely be very strong and will contribute far more to top line growth.
So aquaculture is today our biggest business, roughly about 35%. Geosynthetics used to be only about 10% a few years ago. It's already now at 15% of the company. So it's obviously growing quite fast and is a very strong driver to our ROC. So in H1 of this year, we were able to increase ROC by 4%, which is quite significant. It's driven obviously by margin and these businesses. Then we see, if you say take global fishing is roughly around another 15 to 20%. Our sports business is around 15%. So these are the larger businesses. Ropes, yes, it is a fast growing area, but I'm talking about the value added. So we do have Approximately 80% of our sales are now value-added products. The balance 20% tend to be more the commodity ropes. So the base is fairly large on a revenue side in that area, but we're changing the mix. So the margins are driving a lot in that area as well.
And therefore, margins scope for improvement from here?
We will sustain, and of course, we will look to improve, because as we drive innovation, our innovative products are always at a slightly higher margin. So we will continue that mix towards better value-added products.
Okay, you've done a buyback as well this year, 200 crore odd. What's the thought process with regard to capital allocation going forward? Because you're a very healthy ROC kind of a business. So curious to know where you're allocating capital.
So we have, of course, done quite a few buybacks. It was an efficient way of returning money to shareholders. And as you know, we do have quite a lot of cash in the balance sheet. Going forward, we are really looking at aggressively growing. So we are increasing our capex. We have good opportunity, including, as I mentioned, in value-added rope and some of these areas where we're increasing the capex. And we will continue to look at the opportunities of M&A. We haven't yet found the right fit, but that search continues, and we will hopefully find something in the near future.
Okay, and size and type of acquisition that you're looking for within India, outside India, or you're open to everything?
Our focus right now is outside India. We have defined quite clearly the guardrails. It will be our first acquisition. So, we want to be careful, make sure that it's something we can digest well and build value out. So we are looking primarily at outside India right now in an area that will add technology and product to what we have and in allied businesses. Size will not initially be very large. We're looking at, in the $20 million range, that type of area. So it's very easy for us to digest. Important is that it should be a business we understand well, products we understand well, and things that we can add value to. So that's a very core part of our strategy for acquisition.
Very interesting. And is geography also going to be something that you look for? Is there Europe, US is that the kind of geography you're targeting with regard to acquisition?
Yes, probably Europe. A large part of our business is Europe.
Right.
Many of our customers also want us to be closer to them. For example, there have been so many challenges in global supply chain. So that's been one of the key drivers. So yes, Europe is probably our primary target right now.
And as you deploy, I'm not just saying deploy from an acquisition standpoint, as you deploy even from a capex standpoint, do you see a bit of impact on ROC, whether temporary or otherwise, before we start to see a jump again?
Not at the moment. If there is an acquisition that is significant, then we'll have to see at that time. But in the normal capex, no. We are fortunate, being a textile type of process, we're modular in nature. So we can go on adding where we have constraints. It's not a significant single capex that we need a new plant or a new line, not that kind of thing.
And I want to talk a little bit about growth as well. How's demand traction shaping up for you, especially export, because the bulk of your top line comes from export. What's the kind of traction you're seeing?
So as I said earlier, I think it's quite positive at the moment. We did have a couple of years where we had some negative external factors, but those are all closed. And at the moment, the businesses in which our customers are quite positive. So aquaculture, fishing, all of these are doing well, as is also the industrial area in India and geosynthetics. So we're also quite focused now again on the Indian market. Industrial solutions are linked to construction, safety, things like that, that we have. Those are also doing very well. So I would say overall the demand traction is quite good, and we have a positive outlook.
Understood. With regard to your capital allocation strategy as well, where debt is concerned, debt currently maybe 1:10 when I'm looking at your debt to equity. Will that continue to remain so, or do you at all plan on taking on debt as part of the acquisitions as well as the capex?
I think that acquisition piece I'll leave aside at the moment, because it will be very much case depending on basically on the weighted average cost of capital we want to have. But on capex, we don't expect any debt right now. We have sufficient, money on our balance sheet, and we actually want to deploy it better. That's the primary goal. We are very conservative in our treasury operations, obviously, so that tends to pull down the overall ROC. So our objective is actually to deploy and get a better return.
Right. Anything in terms of products of the future you're looking at? So you're doing very well on current products. You've spoken about a couple of existing products which you're going to focus on more. But any new products of the future that's in the pipeline that you're considering as part of R&D?
Yeah, so the products within our current businesses, there are always new products in our pipeline. So that's very much a core strategy for our R&D team. They have a lot of targets on that area, and I must say they live up to those targets. In terms of new business lines, yes, there are a couple that we're working on, but I think it's a little bit early. They're nascent stage right now, so it's a little bit early. We need to make sure that we can see them growing sustainably, and then it's probably better to talk about it.
Right. Very interesting because the stock has done so very, very well. And the Q2 performance also has been strong. So many congratulations, sir. It's been a pleasure speaking and getting all of that perspective.
Thank you very much. And I just want to add one last thing that, finally, this is about our team. And I must thank all of them because they show a lot of hard work, ownership, and that's what actually delivers the results. So that's the core strategy here.
It's certainly a very interesting story playing out, and also it's a story where India export is getting captured in a big fashion. So, interesting one.